All right. Good morning, everybody. Weakness continues. Some pretty big names are finally getting on board with the A or B scenario that we started the year with. We started the year with the idea that we would be weak in the first half, strong in the second, or strong in the first half and weak in the second. Both of those scenarios had weakness this year. So now we got Ed Yardini, who has carried 7,000 as a price target for a year and a half now, maybe 2 years, saying that he agrees there could be some short-term weakness and implies that we're on the edge of a flash crash possibility. His number may be a little different than my number on where that flash crash may come in, but he's on board with the same logic now too. It's not about a recession and longer term weakness either. These flash crashes can flip over really fast, like just a flush of the system, and then start building back up from there. Yeah, I'm sure he didn't make any friends when he adjusted his call out, because he's been adamant about 7,000 for a long time. Funny thing is, he still didn't take it off the table either. Right? Just because we have this discussion of weakness, still had the other half of the conversation that we were looking to go higher later. Now, there's other analysts that are comparing the early part of 2022 to the market that we have right now. This would be an abbreviated form of the 2022 market. Looking at what we've got going on this morning, NASDAQ down the most at 1.25%, with the S&P behind that at basically 1%, the Dow, and then small caps down the least, but all of them basically at least 1% to the downside or more. Market Watch doesn't have anything for us this morning. This one is usually only going to show you the biggest economic events of the day, and it doesn't really get into the nuanced, smaller economic events. It also only does US. So when you go to this one, you're really just looking for, hey, what's the big hot topic one today? And a lot of times it's just going to tell you there's nothing here. All right, but we don't stop there. We look around. Got FX Street. This one does good capturing economic events from around the world and has this impact gauge for newer traders who don't necessarily know from experience which one of these events may be more volatile or whether or not they need to be concerned with it. So this is a good one, and you can set it to your own time zone, which is nice. We've got some auctions today. And as I usually point out, if we have auctions anywhere in the 3 time frames that we get auctions in, just assume that we have auctions on the other 2 time frames. So if it's 11, 11:30, and 1 o'clock, that's when we get auctions. And no matter how many websites you go to and look at when it comes to economic events, you won't find all of the events. There's a lot of them that just don't make headlines. They don't get covered. They aren't considered impactful enough historically, and so the market just doesn't pay attention to them. That doesn't mean that they can't move markets or that we, shouldn't pay attention. The problem is we can't find them all. And I promise you can look as much as you want, you'll never find them all. So I always argue you don't need to. You can do some due diligence, check a couple of sites. Otherwise, just watch the clock. These economic events, they come out on a half hour, on a new hour, maybe on the quarter hour. So you can just anticipate that every new half hour or every new hour, you have the capacity for another economic event to hit. There's been some talk now that that Germany may not be able to push through all this spending that the government proposed last week. The entire world turned towards Germany last week. It'll be interesting if they can't get it to go through. There's a phrase that says, in lieu of sector rotation, there will be volatility. And this wasn't necessarily a sector rotation, but it was a rotation in capital if we were going to see money moving into German bonds. Well, what happens if it can't rotate? Then we're going to get that volatility. So we're looking at the SPX here. I'm on a weekly, and if we put it on the daily, we made contact with the 200 last week, but we managed to close above it. So we got below it, we closed above it. And if you take it back to 2022, we had that same drop. We got below the 200, we got back above it, and then we just chopped here, digesting a bit before we got a rally back up above the half. Wasn't able to keep it, but measure that move down into the 200 and then set that half back. That was 2022. So now we're in the same situation. We've had a move down into the 200. We can expect to digest around that level and or just flip it back up already. All right, so here's the same thing on a weekly. Drop down, bounce back up into the half, and then another leg down as it struggled some more, putting in some lower lows. Another test of the half before it finally washed. So we haven't bounced yet. We can digest first, hold around this 5,700 and just digest here before bouncing back up into 59, or we could just bounce back up into 59. The flash crash is on the table with the idea that what if we don't bounce first? What if we just go ahead and dump? It would be a very short-term event. That's why they call it a flash crash. If you go back in history to these epic 1987 flash crashes, they were huge and they were fast. That we went down there and we came right back up again really quick. If you look at the ES this morning, we're still holding above Friday's low. And I would say that's a line in the sand we want to keep our eye on this morning. It's around that 5,700 level that I was talking about last week. I think Yardini is using something a little lower, like 56 something, but I'll use my own numbers. I always have. The rate of change in the cumulative volume index for net selling is not as extreme as the price action that we've been seeing. We got the put wall down with us at 5,700. We are a long ways off from the zero gamma volatility trigger and then the call wall. $56.83 is a snow line in the voodoo model. Kind of a big deal. 56.83. As you can see, we're on the lower ADR this morning. If we get to one of these red lines early enough in the day, we can go to the other red line by the end of the day. The problem is we got to that during the kill zone this morning between 2 and 4, and we came off of it really nice, and we stalled around the half. All right, if we think about this and the midpoint, we stalled around that half. That's not good. So after that bounce and that stall, we drop back down. Sure, we've got a higher low, barely. And if we were to measure those two pieces, we've stalled yet again on the half. So we're getting lower highs, higher lows, and that's building us into a compression box. If we break that red line to the downside, then we'll look for an inside day breakout and a 111. Yesterday 111 puts us down underneath the yellow line here. But not by much. So whether it's yesterday's 111 or a full ADR, a breakout of yesterday's low offers a reversal opportunity around that 56.60. Below that, we've got the options level 56.50, then a 1,236. Then we really get to expand to the downside. I mentioned last week we can get below 5,700, but we don't want to close below it. Same goes for this week, at least at the moment. We can get below there like we did on Friday. We just don't want to close below that level. As for the move back in the other direction, at this point, we have to get through the mid, this 57.32 cog line or the half back on that first bounce from the kill zone. Then get to our own Globex high, get to Friday's close, then the cog line 57.92, and then Friday's high, then the upper ADR. We're starting the week already below the weekly floor pivot. That's bearish. Today's floor pivot is lower than yesterday. That's bearish. Price opened above it, but we immediately came down and hit it, so we don't have an MDP. And it's a wide channel or wider which implies if we do break out, it likely doesn't stick. Now that can go to the argument that says, if we break down out of yesterday's low, we likely reverse and we have to get above that 5,700 by the end of the day. Just remember, these channels don't make price break out, and it doesn't stop price from breaking out. They just give us some insight on what to expect if we do get a breakout. It's worth noting we'll have to get through the S1 to get a breakout of yesterday's low, and the S2 is much further down, below the cog line, 56.28. So we'd have to get through 56.32 to get there. When it comes to using floor pivots, there's a 1-2 play, right? We'll show it the other way around over here. This is the floor pivot. Price went up to an R1. So it's a 1-2, right? That's the 1. And there's the drop into the 2. Now that can work both ways. We can start on S1 and rally into R2. Doesn't have to just go one direction. But the idea that we're on S1 this morning does kind of set us up for a 1-2. That lines up with the idea that if we get to one of the ADR lines early enough in the day, we can go to the other side by the end of the day. But again, pivot points and channels and boxes, they don't make price move, right? They don't stop price from moving. $57.57 is last week's point of control on the volume profile, and it's a really wide distribution. It was a pretty nasty week, all things considered, but we held a reasonable range. 58.50, 57.50. That's the ugliness. That's the zone. So if we want a decent run up into 5,900 or 59.50, then we've got to get completely out of this trash from last week. 58.50 is the line in the sand to get through. But that point of control, at this point, with as nasty as everything was last week and this distribution that's so wide, and I don't think that this point of control has any value at all. This 57.60 point of control. That's my take on it this week. And until we challenge it or test it and it proves me wrong, I'm going to roll with the assumption that this point of control from last week has no impact or interest to us whatsoever. $10-day, 30-minute volume profile with TPO. We've got a bit of a discrepancy between these two, other than the point of control lines up, which is great. We're certainly not seeing a reflection between trades and volume at this point. 57.65 very likely will be the new point of control, but don't see it happening for at least a week, especially if we don't come up and just sit right there in that zone and build it out, which I definitely don't expect us to do. So over the course of the next week, we're going to start losing these candles from the left. That will remove that point of control, and it's going to have to go somewhere else. At this point, 57.75 area is the most likely place that it's going to be at. The question is whether we will be above it before it gets brought down here or not. So not only do we need to hold above this 5,700 on a daily close, I think we need to get above this 57.75 before that point of control comes down. On Friday, I kept Thursday's point of control. Now, the textbooks will tell you to do this every day. I've got enough pivots, so I generally don't do this. But if you don't have enough and you want more, then every day you can just carry forward the previous day's point of control and the value area high and value area low. I'm not interested in doing that, but Thursday we had a really good level. Seemed like the market had interest in it, so kept it for the day. We have a new VPOC from Friday. $57.63. So if we try to make a move to the upside today, we've got to get through Friday's point of control. Right now, we've got a bit of a disagreement between our current TPO and our current point of control. So we had a lot more trades across the top here. The volume was lighter. And we've got more volume down here, but the trades were lighter. This isn't a classic distribution. It's not, one of the letters where we can get like a lowercase b or a capital P or even just a classic D. At this point, it's just a big mess. If you're looking at these two this morning, you want to see if they're going to come in with size and defend this low. Right now, we'd be looking for this to build out and defend the low that we've had in the Globex, this 5,700. If they don't do it here, look for them to do it at yesterday's low. So, say we sell off from this point, we get down to this level. We want to see that sort of volume and that sort of trading at this low, showing that they're coming in to defend that level. If we're going to get a flash crash, one of the things you can use to keep your eye on throughout the day is going to be the VIX. Back in August, we spiked up into 65. That was during the carry trade unwind and VIX short squeeze. There was attributed to a number of different things, but it doesn't last, right? If it's just a flash, but a pretty easy signal you can't miss, getting above 30 and just watching it take off like a rocket ship, right? So keep your eye on the VIX. And we're not talking about these little gyrations where, we're making a $1.50 or a $2 move. we're talking about going from 30 to 35 to 40, 45, kind of get the idea. $5 moves, extreme and fast. So if the ES touches yesterday's low, we break below it into the 111, the 1236, but the VIX hasn't jumped above 30, I would be playing the reversal to run it back up. We break below yesterday's low and the VIX is going above 30, well, forget the reversal. Run the continuation short. Sell into weakness. Looking at things that are down this morning, that'd be a big list. Let's just run it the other way around. What's up this morning? Hey, the VIX is up. Nat gas, bonds, and crude a little bit. Hey, they started talking about refilling the SPR last week. That's the Strategic Petroleum Reserve, right? It's the U.S.'s little ace in the hole to control prices on a short-term basis. Usually it's manipulated by elections, and it's just another political tool, and it doesn't matter who's in office, right? So I'm not trying to point fingers and turn this into a political debate. It is always used by whoever is running things. It needs to be refilled. There was some posts on that last week about refilling the reserve. So that pretty much put a put in on crude. You can just search SPR. You can see the talks that's been going on, especially on finance juice. You can just search SPR here. You don't even need to spell it out, the Strategic Petroleum Reserve. You don't need those 3 words. Just use the abbreviation SPR. So while we could get down into 65 or 67 and a half, it would likely be a short-term thing. And then we would flip it back up because the government sounds like they're going to be putting a put in here to where they'll have buying programs ready to go. Say they choose 70. Then every time we get down around 70, they'll be buying it up. Otherwise, we've got bonds and we've got the VIX. Now, this move in bonds may be because of the news that came out of Germany saying the Green Party, whatever that is, I'm not big on German politics or political parties, is blocking that change in constitution and change in what Germany is doing fiscally. So now we're seeing TLT make a move. I think if the headlines change in Germany, we're going to see this go back to the downside. Otherwise, Bitcoin's down, China, chips, uranium, pot stocks, software, hardware, small caps, airlines, just about everything else. You could make a list of things that aren't down 0.5% or up 0.5%, those that are kind of riding in the middle that haven't made a move yet, to see which way they break. but it's a short list on the things that are up. And if we're going to rally today, then we need either headlines, the Mag 7, or really strong options flows. Of course, we don't have options in the pre-market to see any flows. And at this point, we don't have the Mag 7. And you can't spot a headline when it's news that comes at you. So we just got to wait it out. Everybody, be careful, be safe. I'll see y'all tomorrow.